Welcome back, and today I'm doing my options weekly review. This is where I go over all my trades for the week. I don't hide anything, I put it all out here so you can see the good and the bad. Just so happens that this week was actually pretty good for me. Tomorrow I'm going to do my top 3 options to play video, and I also hope to get out my leap video that you guys voted for on that community poll. So 2 videos dropping tomorrow, unless something comes up today. So let's go ahead and jump right into this. So first off, like always, I always show my daily close snapshots. This week was pretty good. Monday and Friday up pretty big. The rest of the week flat but still up. This might be the first time since I've been doing this channel that all 5 days are green days. Basically, the market has been just going up. Like QQQ approached 400 without any hesitation. Will it pull back a little bit? Maybe. I mean, I feel like it's moving up a little too fast, but that's why I'm starting to lock in profits and just kind of wait and see what's going on, because I think we might be due for a small pullback, a little correction. Not too huge, but a little dip gonna come, I think. Progress report review. Since last week at close, my net lick is up 4,400, so that's 2 positive weeks in a row. Finally, after this long drought we had here, starting off November pretty good here, and you can see that the realized premium is already up $1,250. Because I am closing a lot of stuff that was getting down there to like 80 and 70% profit. Because, again, I think there might be a small pullback. Might as well turn into some cash positions right now and wait for that pullback to put on some more plays. Monthly realized income, since I've been tracking it on my options tracker sheet. And you can see the results so far. Overall, since I've been doing options and logging it here, I'm up 84,000. This year, I'm up 48,000 in realized premium, so that's pretty cool. That's a lot of money. I only have 2,400 of contract or of premium cooking. I don't have my leaps built into this calculation here, so that's kind of ignored. But it gives you an idea of what I'm looking at right now. Here's all the trades that went on for this week for me. Quite a few to go through. So first off, we got the Ally put at 42 that I put on. I like Ally as a company, wouldn't mind owning the shares, and there's just enough premium there to tempt me to go ahead and finally make my first put play on Ally. I did talk about this in my top 3 options play video, and here I am actually putting it on. I got filled at 39 cents, almost a 1% return. I think it's like a 45-day hold here. HYLN, I mentioned this in my top 3 video that I was going to put this on. And actually, at one point, this is already up 300% according to Interactive Brokers, which is kind of funny to look at. What I did on this position was I sold one put. I sold one leap put and took the premium that I got for that and bought 2 long calls at 12 strike. So essentially, if HYLN does shoot up, I get to participate in the upside as though I own 200 shares. If it stays down, then my max loss is going to be as though I own 100 shares. I think it's just an interesting trade to put on so that I can enjoy the hype without really risking too much money. Like my max loss on this would be about $1,200 minus the $30 credit I got here. CRSR, I actually closed my 25 put out and decided to sell some 20s because it dipped before earnings. I thought it was a decent place to throw on, so I actually did open up some more contracts, closed the position I had out already for a profit, and then put on 3 contracts at a lower strike, so higher probability of it being out of the money, and collected $47 per contract. Thought that was just a pretty easy play to make. It does go out till January, so it's going to sit there and cook for a while before it starts making a profit, but there you go. X, this was a play that somebody mentioned on one of my videos that I liked, and I ended up putting on. And another Discord server was talking about, doing bull put spreads. So instead of putting on just puts, I did do some spreads on this, and I think that paid off $161. Whereas before, I was thinking about just putting on 3 19 puts. Instead, I put on 10 spreads here, and I was able to close those out for $2 a contract. So it cost me $20 to close this and lock in $161. And X has been on a tear. So these might have been fine to just sit there and expire worthless, but I figured let's just lock it in and move on to the next trade. PLTR has been moving up. It's above $26 when I close this out. And I was able to close this out for $4 a contract, so I was like, let's lock it in I'm hoping that PLTR dips a little bit or that the VIX goes up, because I do love selling puts on PLTR. But with it at 26, like the 20 put right now doesn't really give too much, and I don't quite want to sell the 23 puts yet. So that is a position stock I'll be looking at. Just right now I don't have anything on PLTR because I just closed out this position. Campbell Soup, this I closed out on Monday. Campbell Soup was sitting at basically $40 and I think 8 cents, so it's right at the in the money area for this position. And I decided just to get rid of it because, you know, it had less than a week. I'm not gonna play Campbell Soup with a week left and see if I make money on this play or not. Especially since I could get out with a small profit, even if it's just $3. I figured that was a scratch. Just get out, take away that Vega exposure, and just, you know, stay away from potential losses, essentially. Like, anything can happen in 1 week. So when there's less than a week left, that's when I tend to close stuff a lot more conservatively, I guess you could say. I already talked about this one. CHWY, again, this was one that was a top 3 options play a while back. And I was able to close it for 34 cents and lock in a huge gain, so I decided to take it. I was also taking off some risk because I was getting a little bit concerned about my Netflix call. So I wanted to reduce other positions that I could lock in just to free up some extra room just in case something crazy happened, even though it is a bear call spread. I don't know, I just felt like taking some risk off, so that's why CHWY came off. BMY, I think this was a position that James Rowe from the Discord server mentioned, and I put on. It sat there, it cooked, and came out with a nice little profit. If you're not in the options Discord server, like, check the video description below. Join it. It's free. There's a lot of knowledgeable people in there that have decades of experience, guys a lot smarter than me, and I love bouncing ideas off of them, and I seem to learn everything. So I learn something new every day just reading through the posts in there, so I highly suggest join that Discord server. Completely free. Will always be free, and there's no plans to change that. Moving on a little bit more, here we got Zoom. I mentioned selling a Zoom November 26 put in my top 3 video. I got greedy and sold the December 3rd put, and this happens after earnings. And after I sold that, I was having regrets on selling that. But the good thing about options, you're not locked into like these contracts. Like, I don't have to wait till December 3rd to get out of it. So I actually just went ahead and said, you know what? Let's close this one off. Got $20 for feeling frisky and getting out pretty quick. And in hindsight, on Friday, actually, I think today, it looks like Zoom dropped significantly, so this would be at a pretty decent loss right now because a lot of extrinsic value just got pumped into this contract. So, turns out to be a good idea for me to get out of this. But I'll be looking at Zoom again because now that it's down, it's more tempting to sell puts because the premium's going to be higher. Some other things we have here is MFA paid a dividend last week, and that dripped in this week on Monday. I'm not sure why they broke it up into 2 trades here. So, like, they first bought 22 shares and cost me 11 cents in commission, and then they bought 1 more share and paid me 6 cents in commission. Like, why couldn't you pay me 6 cents for all of them? But I just thought that was a little weird that Interactive Brokers broke it up into 2 trades like that. But whatever, a dividend paid. And MFA, if you don't know, like, that's a position that I bought at $1.11 and I sold covered calls against, and it's basically a free position at this point. And so I'm just letting that one sit there, drip, and just see what happens. It just feels like free money. Like, it literally feels like free money for me. Intel was sitting at around 48 when I decided to close these out. They were at profit, and I was a bit concerned that Intel might just gap down randomly on me, so decided to close it out. Intel went up the rest of the week, so I was wrong, but at the same time, I made money, so I can't complain. Tuesday, yeah, that was a lot of trades on Monday, but it was quick and easy to close out trades. Tuesday, I decided to sell a Clorox 155 put. I already had one on that was to expire on November 12th. That was, it was cooking for a long time. There's not much premium left, so I decided to put on the next one and get that one cooking. Visa was sitting around 208, I want to say, maybe a little bit less. I decided to sell a put on Visa. I do have a bull Zebra on Visa, so now I have a put sold against Zebra as well. And Visa shot up on Friday, so this is actually sitting at, I think, 30% profit right now. I still have it on. I was debating about closing it, but didn't quite pull the trigger on that. Alright, then I was getting a little fancy, and I decided to sell another Netflix bear call. But on this one, I went a different route. So I wanted to essentially simulate selling a naked call, but you know me, I don't actually go naked. I always have protection. By doing a wider spread here, it's as though I sold a naked call, where it's a lot closer to simulating the win-loss of a naked call than had I just done closer spreads like you've seen me do in the past. So this one is a 30 wide spread, so there's $3,000 being risked on this play. And the 750 should lose money quicker than the 780 will, so it acts more like a naked call. And I could see profit a lot sooner than if I did like a 750 and a 755. There'd be less profit potential, and you have to wait for both of them to move, and the second strike would be canceling out gains from the other one. So it's just something to play around with. Like, when do you want to sell a tighter spread and wait towards expiration, or instead of selling a couple of contracts at 5 wide, why not spread it out and see how that plays out? And that's what I'm doing here. Another position I sold, actually got this one from Jerry from the ETF Channel, or Retire With Less, whatever his brand is right now. This was a pretty good trade, I thought, so I decided to put it on as well. So I did pair it on this one. I got 68 cents for 4,000 risked. I did 2 contracts. I just think that's a solid play. Just have to wait for that one to cook out a little bit. And then after that, I did nothing on Wednesday and Thursday. And then Friday, I was able to close out a couple trades that were sitting at some pretty nice profit margins and just lock in those gains. So Clorox, this one was expiring in 14 days, or 7 days now. So it's only 15 cents to close. Probably safe to keep it on, but at the same time, since I already put on another Clorox play, I decided let's just go ahead and take this one off, because why be exposed to 2 contracts for an additional $15? Doesn't seem worth it to me, so that's why I closed this one off. CCL, again, it only costs 6 cents to close out. Why am I going to wait till November 26th to make $6 per contract? So it just made sense to close it out. Virgin Galactic, showing some weakness to me, so I decided to go ahead and lock in these gains. It'd be interesting to see what happens with Virgin Galactic next week. I'll probably end up putting on something new on Virgin Galactic, but since these were getting kind of close on expiration and they were sitting at a profit, so I had to take that risk off, get away from that gamma, and I could see what happens, get more information, and then possibly sell some more Virgin Galactics next week or maybe the week after. Hopefully we see like a VIX increase. Overall, between all this, I realized $1,255.06, so that's pretty cool. Nothing was set to expire at close. Whew, that was a lot. That was a mouthful. All right. Here's the log spreadsheet, because some of you would like to see when I open these trades. I think the column to really look at would be how long these trades were on. So I made $12.55 this week, and that's just when I closed it. But if you look, that $12.55 was earned over all these days. So some of these contracts were on for 35 days to help contribute to that money there. That's why I like the 35-45 area. You just let it sit there, cook, enjoy the profit sometime in the future. You just got to be patient most of the time. Current positions, I did close a lot of stuff out, and I opened up less than I closed, so it all fits nicely on this screenshot now. Did I close this one? I thought I closed this one. Yeah, so I don't know why this position was showing up when I took the screenshot, but this Clorox play is actually gone. Nusi was on a tear. Like, it's up to almost $29, which means I'm not going to be assigned on these puts most likely, even though I wanted to buy those shares. So what I'll end up doing probably in 2 weeks is selling some more puts on Nusi, because I do want to actually double up my position there, but might as well use options to get in. Here you can see the Visa put I sold. I mean, it's sitting flat right now. The Ally position is up 10% already. That's pretty cool. IBM1. This is an interesting one. So I guess they had like a spin-off or something, and you'd be issued 20 shares of another company in addition to the 100 shares that this contract represents. So now this got a special ticker called IBM1, and you're not allowed to open up new positions using that ticker. So that kind of defeats my whole goal with this leap of selling covered calls turn into a PMCC after an up day. So still trying to decide myself what I'm going to do here. Luckily, the delta's high, so this contract would still represent holding 100 shares, and I have 3 of them, so it's as though I have 300 shares of IBM. Not sure if I want to close these out as a loss and then kind of maneuver it into a regular IBM option contract I can sell covered calls against, or if I'm just going to leave these ones on. I think it's going to be hard to get out of these because people can't open up new positions. There's not going to be a lot of buying pressure, and you may have to sell these at just intrinsic value. Luckily, I bought in the money positions here, so there wasn't much extrinsic value to give up. If the bid is less than the intrinsic value of the position, then what I would do would exercise the position in order to get assigned the shares and then sell the shares, because there's no reason to close for less than extrinsic value. So just keep that in mind if you have the IBM1 position on. Over here, I guess you can see both Netflix positions were up massively on Friday because, well, Netflix dipped quite a bit. HYLN, looks like this went back down. It's kind of weird seeing this position like set up like this. I kind of want to break this one up because, I mean, that spread that just looks crazy. All right, and so this week I also turned on portfolio margin. And theoretically, when you turn that on, you should see your margin maintenance go down if you're diversified. But what I saw was my portfolio went from 22,000 in margin maintenance all the way up to like 36,000, which means that I might have been less diverse than I thought I was. So that's something I'll be looking more closely at going forward, is seeing if I can get more, spread my plays out more across different sectors and lower my amount of contracts per position to try to put the numbers in my favor. So this is kind of the wake-up call. And then it'll be interesting to see what I learn about portfolio margin as I'm using it now, because it is a new concept that I have to learn how to manage. On this screenshot, you can see what my account was last week, Friday, versus this week. So you can see there's the 4,400 increase. Friday was a good green day because IBM and Visa decided to help me out quite a bit. Hope you guys enjoyed this video. Tomorrow, be sure to watch the Leap video I'm putting out, and then like, subscribe if you're liking this, and good luck next week, guys.